Every day, the SPX reveals a hidden roadmap within 0DTE options data. Learn to read it and you'll gain a massive edge. In this video, I'll walk you through how the 0DTE bot decodes 0DTE options data and how to use it to generate trade ideas by uncovering market sentiment, volatility expectations, price targets, and pivot points. Skew highlights whether there are more calls or puts being traded. If calls skew, there are more calls than puts, which is generally regarded as bullish sentiment. If puts skewed, there are more puts than calls, which is generally regarded as bearish sentiment. The percentage shows the magnitude of the skew. A higher percentage reflects stronger sentiment. And for quick reference, a color coding system is displayed in the upper right. Green indicates call skew, while red indicates put skew. Max call is the strike with the highest 0DTE call volume, and is generally regarded as the upper bound and a potential upside target. Max put is the strike with the highest 0DTE put volume, and is generally regarded as the lower bound and a potential downside target. These levels are typically established early in the morning, and on most days the SPX will test one side or the other. On bullish days it generally tests the max call, on bearish days the max put. Use these strikes as reference points for profit targets, entries, and strike selection. The attached chart shows the volume profile across all strikes. Call volume is displayed in green, put volume in red, and the gray vertical line marks the current spot price. The higher the volume at a strike, the stronger the level tends to act as support or resistance. Since these metrics are based on 0DTE positioning, they are dynamic and can shift throughout the day, providing additional information. If the max call shifts higher, it's a bullish signal, indicating that participants are positioning with calls further out of the money, and therefore expecting more upside volatility. Conversely, if the max call shifts lower, it's a bearish signal, suggesting that participants are positioning closer to the money and expecting less upside volatility. If the max put shifts lower, it's a bearish signal, indicating that participants are positioning with puts further out of the money and expecting more downside volatility. Conversely, if the max put shifts higher, it's a bullish signal, suggesting that participants are positioning closer to the money and expecting less downside volatility. And finally, if the max call shifts lower, while the max put shifts higher, those signals cancel each other out, indicating an overall expectation of lower volatility. The strike that could potentially take the max call designation is marked in parenthesis, along with the percentage indicating the volume difference between the current max call and the second highest call volume strike. The strike that could potentially take the max put designation is marked in parenthesis, along with the percentage indicating the volume difference between the current max put and the second highest put volume strike. There are many ways to use this data to manage trades. Let's go over a few common scenarios. For example, if you sold a neutral iron condor and the max call is shifted lower while the max put is shifted higher, this confirms the thesis of the trade, that of neutrality and lower volatility. For example, if you are long calls and the max call is shifted higher, it confirms your trade and allows you to remain patient or roll up your long calls to maximize convexity. For example, if you're short puts and the max put is shifted higher, you can roll your puts higher to the new max put to collect more premium. For example, if you are short calls and the max call is shifting higher, you can roll your calls higher toward the volume drop, or start to reduce directional exposure by selling puts or buying a long call. Now, what is the volume drop? Max call or max put can sometimes act more like a zone rather than a precise level, especially on trending days. This means that instead of a single strike dominating, two or more adjacent strikes may have roughly equal volume, often followed by a sharp drop in volume. This decline in volume, known as the volume drop, can create a high probability countertrend setup. And that is the 0DTE bot, simple but highly effective.